Hey guys, what's up? It's April 11th. This video is going to be very different than all the other videos because this is something that a different trading kind of philosophy. So it's just much different than what I was doing. And I personally am switching over to this style because honestly, I'm just not being consistent enough with my own approach in terms of the results. So I just feel like there's too many moving parts. It's too. I try to keep it as objective as possible, but there's still a lot of subjectivity in it, and I think when I'm back testing, I'm kind of just lying to myself, pretending there's not, and then in real time, I don't get the results that I think I should be getting because I'm not being what's a good way to put it? Because I'm not being maybe honest with the actual results, right? I'm saying, oh, I wouldn't take this, or I wouldn't take that, I wouldn't have done this. Like, I don't know that because then in real time, I am doing it, right? And then in hindsight, I'm saying, oh, yeah, I see how this is wrong. I shouldn't have done that. So it's just, I can't apply the real time trading results, or I should say, I can't get the real time trading results that I want to be getting. So I'm not really going to be trading that strategy anymore, that style, because it's just not working, unfortunately. I thought the indicator would help. It did and it didn't. It's just in real time when it's time to make that call. Do I take this trade or not? Is it really what I want? I just wasn't getting the accuracy that I wanted to get. So now what I've switched to is just pure market structure. No volume, no moving, nothing. Just pure market structure and movement. So let's get into that because I don't know. I'd like to think this is better, but this is something that obviously you think it's better. That's why I'm talking about it. But we'll see if it actually is. So this may look confusing. So let's duplicate this. Make a copy. No. Turn auto save off. All right. Delete all this. All right. So we can go on really any time frame, um, which is cool. We can go to the 15-minute here. And what we're doing essentially is we're marking our high and low of the day, of the sessions. And what we want to do is we want to look for market structure or market to come back to these areas, and we look for a reversal. We look for a reversal. And I'm just marking out kind of how I look. But why don't I go right actually to the most recent day? Because that's the one I just had up with all the lines on it. We'll go right to the 3 minute. All right, so as this day goes on and we push new highs and lows, price typically, when it reverses, it gives you a nice little uh, movement. I just got to start drawing this out. So we have a high here to start the day. We have a low here, which we then have another low here, so I'll just move it here. And what we're doing is we're looking for a price to come back and sweep these areas, make a reversal move to the opposite side. So here, we'd want to go down, which would be this move here. And then when price comes back to this new swing point, we want to see price close below that. All right. So this is going to be our swing point that we want to break because we got like a rejection, right? Clearly, sellers stepped in up here at this high of day. They stepped in at this high of day. They stepped in at this one, um, and they made a push down, but buyers stepped back in. So now what we want to do is we want to look for sellers to come back to this area and close below it, indicating that it's flipped. It's seller dominant now, and then we can take our target towards the next levels of these swing points, these next swing points. So let me hold on. Oh, needed that drink. Okay. You can see here we also created a new high of day. And as we did that, we kind of created another swing point. I'm sorry, no, we didn't. No, we did not. So this will be high day. And so now, once we have this triggered, we're just waiting. If price comes down here and quickly closes below this previous swing point here, we're going to take that short and we're going to target the next area. Now, the cool thing about this is if the if the price is like super choppy and leaves a lot of these swing points, it's a good idea to not trade because you're trading into more potential resistance, right? Because you can see at these swing points, there is typically resistance that appears there again. So that's why we want to take targets there, and that's why we want to not trade into them because then the price can immediately reverse on your position. So let's look for some more examples. So here, we have a new low of day. We got this move upwards. This is something, this is now a swing point here. We're looking for that break of the structure. So that is our signal to enter here. A lot of times you'll notice it's these W breakouts here, something like that. You're breaking above that middle part. But in this example here, you can see it's just not happening. These previous swing points are really good sticking points for price. And it's amazing how frequently um, price will just fail to close really over it, kind of like here, like it's just barely closing over it, and you can see that it just doesn't have enough oomph to get through it. But then when you finally get a strong close through it, something like this, you can see price then tendencies to have enough oomph to jump to the next swing point. And so really what we're trying to do is we're trying to target trades like these. You can have multiple targets. You can have one here, you can have, one maybe here, whatever it is. But in the same time, as we're trying to capture these trades, we also want the close of the candle relative to the next swing point, the next structure to break, to be positive for us. So here, right, like this is only 0.59, so you don't want to get in that trade like that. Maybe you're going to pull your entry, maybe you're going to pull your entry back down here for a better risk-reward ratio. Maybe you're not going to take it at all. Whatever the case is that's how you then have to adjust these trades to make them make sense. You can still get 2R in this trade. You can still get even apparently like 4R. You don't know that at the time, but as a trader, you can say, hey, this is as much as I'm going to risk, or I'm shooting for high risk or high reward trades. So my entry has to be down here. If it hits, cool. If not, whatever. But man, that's pretty cool. You can see that there. Um, don't trade the breakouts, right? So if this is the low of day, you don't take a break of that swing point because this is where you never know where the buyers are really going to step in down there. Here's another example here. We close above the excuse me, the high of day, and you don't know where the sellers are going to be, and apparently they were right there, just waiting for that candle to close. They turned it back around. So this is the 3-minute here. We can zoom in a little bit, go to the 2-minute, and see how this would have played out in the 2-minute. Like this is a perfect example of the close relative to the next swing point. So if you look, at the close of this candle here, which closed below this break of or the structure, we broke the structure. So we're going to enter short here. You can see even if you enter on the close of the candle, you're at a 1.5R, 1.6R target. This is pretty nice to start. But again, you might say, hey, no, minimum I'm doing is 2R. So you just pull back your entry a little bit, right about there. Would have got filled. And look at that, that's perfect. Another example, we're not taking this breakout of this swing point because that's the low of day. Also, when you start having a strong trend, typically best to keep trading with that trend as much as you can. All right, so that's the 2-minute and 1-minute. I think we get an even better entry here. Yeah, it'd be a tighter stop at least. So you'd have something more like that. That's how you play it. And instead of inversing a fair value gap, what we're doing is we're waiting for the actual structure to change. So we want to see that break of that structure as new kind of like resistance swing points are being set up in our favor, right? Like there's one there being established. That's beneficial for sellers. That's beneficial for sellers. We're getting all these areas of resistance if buyers try to pull the price back up. So as we're doing that, and then we get to break structure as well, you know we're in a good trend that we can jump in on. And again, if there's something like say there's a price came down to here and there's a swing point for whatever reason, you know, you wouldn't really want to take this trade because, again, you're trading into resistance. And that's funny, there actually was resistance there for some reason. Um, hmm, I guess that's really where that buying rally started, so that's a good spot for it. Probably point of control, this movement. Yep, exactly. Yeah, so that's why you don't want to trade into swing points if they're in close proximity. You're best to have big gaps here like this so that price can just kind of move more freely because there's not as much resistance or support established in those areas. So I'm going to stop it at that. That's what I'm going to be focusing on for a while. It's I don't know. Let's do one more. Let's do one more. It's only been 11 minutes. That's rookie numbers. That's you guys have really good attention spans. So let's do this. All right, so start the day off with a high of day. Um, we get a little pullback here. Okay, this is one, I don't know. I mean, you could say like this was where the structure, you break that, you sell on that candle, target down here, something like that. What are we on? We're on the 1 minute? Well, let's go out. Let's go to the 3 minute. What happened to my chart? All right, so we made a high, came down, buyer stepped in. Yeah. Um, mark all these out real quick. Price came up, made that. That's low of day though, so can't really do anything there. We have this sticking point here. Yeah, see, like, we made a bottom. We didn't have to guess what is this the bottom? Is this the reversal point? We didn't have to try to figure that out, right? That's a good looking candle. Maybe this is the bottom. No, loss. Oh, that looks good, loss. That looks good, loss. And then, okay, all right, maybe that was the bottom. I don't know, right? This is what we're thinking real time. Okay, yeah, here we go. We got a little resistance. Bam, you get this big candle through here, and you're like, okay, yeah, we're in an upward trend. This is clearly we did a nearly a V-shaped reversal there, recovery, whatever you call that. And I'm taking this candle up. I think we're gonna go to the new high or something. I don't know. Say, oh, that's not great. I don't want that. Let's go back here. I want 2R. And you're like, oh man, I'm not in there yet, but my target still hasn't been hit, so I'm gonna leave my order up. If my target got hit there, that high day, if that got hit, I would have pulled my order. No, bam. I don't know. I probably wouldn't have held my limit order there that long, but if you did, good for you. Yeah, I should start doing it because then I'd start winning awesome trades. Look, you would have got filled, and then one single massive candle just instantly into your target. And why isn't there ever slippage in your favor? Like slippage is always, it seems like to me, not in your favor. Why can't it ever be in your favor? Yeah. So yeah, just so good, so good. Swing point here, up here, new high a day. I mean, it's crazy. Look at these swing points and how oftentimes price just fails for whatever reason to close above it. It's almost tempting here to take a short, right? Like, man. And then again over here. Look at that. Can't it barely got above the structure here. Failed to get above the high of day. And look at how these candles just right within like the definition, like the thickness of the lines almost perfectly. And it gets kicked out. Hmm, man, that's what's up. That is beautiful. These, that's the type of thing I want to be able to notice real time. Where it's like, yeah, dude, our next point of resistance is down here. This clearly looks like it's rejecting the high of day and getting booted back out of this structure. Our next structure, our next area of support's all the way down here, dude. This is a great trade. Nothing there. Price should just drop. Clunk. That's at the end of the day too. That's MOC. Um, like same thing with this one. Just man, there's no resistance until up here. That would have been a little spooky right there. I'm not gonna lie. That's why I'd be like, yeah, I'm pulling my limit order. Clearly, we can't breach high a day here. But maybe you could zoom in on like a 1 minute chart and look at what's happening as price comes back to where your entry was, as it sets up on this old structure. Like so, this old swing point was resistance, and then once it got flipped, it became support. It's so good. I don't have to worry about volume or the shape of the candle or anything. Like either it closed beyond that swing point or it didn't. Let's do another one. It's fun. Oops. One's not looking like a great day. All right, there's something. There's a few things here. All right, so just some just some day. Wednesday 8th apparently. You know, we're just selling off, selling off, selling off, making these points. Oops, these points of structure here. And these are all areas we're like, all right, well, if a reversal comes, these are the areas we got to worry about. If we can bust through these, then especially this one right here. Oh man, oh dude, oh man, yeah. So that's how. Okay, let's do this. You're just going about your day, watching the charts, right? And you're like, all right, well, here's a swing high or a swing point. Here's a swing point, a new low of day. Okay, another swing high. You're like, all right, we're starting to get congested. This area is congested. We don't want to trade into that. But this area right here, oh man, if we can get a signal there, that's the golden zone right there. This is another good zone right here. Not quite gold. This is more of like a silver zone. And let's just keep going, right? We don't know when this reversal is going to come, so we're going to keep marking out our our areas, our swing points. All right, so all right, maybe this is a reversal, guys. We have a new low of day. It looks like um, we've got a new area of support right here. This new structure point is support for us. This previous point of resistance is now being flipped here, it looks like. But we don't want to take the trade yet because we're trading right into this structure right here, which was resistance before. Okay, I went one bar too far because I was drinking espresso. Excuse me. Okay, here's one where you're like, all right, well, you know what? This is actually pretty good. We have like an equal distance to our stop to our target. Um, we can pull this back a little bit. Let's do like 1.6 if this gets filled. Um, cool, we're in. All right, cool. We just won that trade in the silver zone. Again, this was just super simple. We broke this structure here that was previously resistance. Now that we're on the flip side, we can actually expect to work as a support for us. So our stops beyond that, have some. I always like to go to the low of the signal candle, anyways, whatever I'm doing. And then our target is just this next area up here. This area is tight, so we don't really want to be trading in there. We got this big red candle, that's scary. Let's see what happens. Yeah, it pushes price back down. But again, look at this. This previous structure point, that was swing point or structure point. I'm calling it all different things. Uh, Previously resistance, now support. So cool to see. Again, this one, we're back below. So this one could be resistance again. Here, here's an opportunity where you could be like, hey, you know what? Even though this zone is small, the size of this candle is perfect. My stop's going to go just below the candle, the signal candle. My target's up going to be up here. We're at 110. Let's just put my entry at that swing for about 1.5. We're in and we're out. Okay, cool. Now, oh, all right. Well, we just started to close in this golden zone. We do have this new area of resistance. Let's get a close above that before we jump in here. All right, gave us a little resistance there. Oh, okay, no resistance now. Um, whatever. We'll do that. We'll do something like that. I'm not gonna target like all the way up. Yeah, 2 touches. I always like 3 touches. Let's just go here then. 1.5. We're in. We're out. We out. And we're just playing the trend. We're just taking the structure that the market previous gave us. We know price reacted there before. We marked it out because it reacted there, and then we're just using it like climbing a staircase. Like first we were using the stairs in our favor to go down, right? Or platform to catch our feet on, and then we just start reversing it and using it the other way. And we just go and we ride that wave. Let's not overcomplicate it. Let's just do that. Let's just do that. I'm really excited about this. This is fun.